reasons. Okay. All right. So, as I said before, we're going to be talking more about risk management today and why, as a group of traders here in Slab Stocks, why we trade less trades than normal groups. Normal groups plays signals like 10, 20 signals per day. And as I said before, we try to keep it low. We try to keep risk to reward in our favor. And that's what will make you guys money as well, because we're trading in a highly calculated risk. Okay, we have highly calculated risks, and what I take, if you follow my trades, you're gonna end up being in profits, even if we place one trade a day, and by the end of the month, let's say we lose 5 trades, or let's say by the end of the month we lose 10 trades, but we won about 5 trades by the end of the month. We're still gonna be in profit because all of it is risk to reward. Okay, I will show you what I mean in a second, but this is why we trade less than normal people, because we want you guys to succeed with us. All right, we don't want you to place 50 trades in a row, okay, or 20 trades or 10 trades in a row. We want to keep everything small. We not small, actually, we want to keep everything smoothed out. And when you're making profit, or when we're making profit, you're going to make profit with us, due to risk management, and due to we have everything set up to make profit with our strategy, or with my strategy, and with my risk to reward ratio. So keep this in mind. More trades don't mean more money, or more trades don't mean more profits, or more trades don't mean a profitable year or a profitable month. Okay, actually less trades mean more money. Okay, because consistency is key, and keeping that consistency is always important. All right, wait. Okay, and keeping that consistency is always important to keep it consistent. So, okay. So I'm gonna tell you what is risk management and why I like to trade less trades these past few years. Because let's talk about retail traders for a second, okay? So retail traders, let's say we have a retail trader here and an institutional trader, okay? So let's split this. All right, so a retail traders are you, okay, you guys, the new people, or people that teach themselves about Forex. So retail traders try to aim for, I don't know, some of them, I had students that wanted to aim for 10% per day. All right, and they were making like 10 trades in a day. They wanted to make all the profits, and stuff like that. There was people wanted to make 50% per month, and there's also people that really want to make at least 100% per year. Okay, now I'm not saying that these profit ratios are not possible. They are possible, but they're harder to get. You need more knowledge, huge knowledge, to gain this amount of profit in a year or month, or in a week, okay, or in, whatever. I mean, 10% in a day is a bit hard as well. You have to have, we sometimes do it, but not every day. That's super hard to do every single day, 10%. But yeah, we do have a few days that we make 10%. So let's talk about the institutional trader now. So institutional trader, or let's say bank traders, they aim for 10% per year. See the difference here, guys. So retail traders aim for 10% per day, 50% per month, 100% per year. But banks aim for 10% per month, per year. Now you tell me, for a small account, you guys probably have, let's say for new traders, you don't want to invest a lot let's say you have about 300 or to 1000, actually to 1000 1K accounts, right? So with this amount, you won't be making a huge amount per year, right? You won't be doing anything. You're just going to be doing pennies. So what I've done, I've been trading for 5 years, as I said, so that's half a decade. And what I've done is I have a system, all right, that includes both institutional trading and institution trading and retail trading. And I have another thing included with what market makers move markets. Market makers are liquidity providers. Now, you'll get to understand this in future lessons or in future Forex sessions, Friday sessions, or also you can understand this in our course that it will be available. You have to talk to Cyrus about it. But I've created a bank strategy of my own, basically. I've created a strategy of my own that in these past 5 years that made me profit and consistently per year or per month, okay? So what's my actual aim for a month? My actual aim for a month is 10%, okay? Now you tell me, okay, you tell me about what the banks aim 10% a year, or institutional traders 10% a year. Keep in mind that these people have billions. All right, they have billions of money to trade, or millions, whatever, or millions. But you guys don't have that much amount of money, so that's why they aim 10%. Like I aim 10% per month. Now I have a huge accounts. I manage institutional accounts, so I manage over 1 million accounts as well. So they're not my personal account, but I manage them for other companies, other institutions. But let's talk about, let's say you have this amount of cash right now. All right, 10% a month for 300 account would just be about 30 euros, something like that. Yeah, something like that. And for a 1K account, it's 100 per month. All right. So what I'm aiming for is not the money. Right? I don't want this money. I don't want this amount. I'm aiming for consistency. I'm aiming for that by the end of the month. I'm gonna. Can you mute? Someone is. All right, let me mute. By the end of the month, I'm aiming for 10%. All right. So that means I have a 50K account and 100K account. Okay. 100K account. For this, it would give me about I think it's about 10K per month. It's about something like that. If I'm not, yeah, about something like that. Yeah. So about 10K per month for me. But for you guys, let's say you have between these levels, right? 300 to 1K, you will get something like these. Okay. So 30 to 100. Now that's not a lot of money for you guys, right? That's not a lot. You're not gonna be making a whole lot of money, but my aim for you is not the money, all right? It's not the money. Forget about the money. Forget about my account. Forget how much I'm doing, all right? Forget that. Just remember what consistency and risk to reward means to you, because consistency is this. Making that small amount, making that 10% per month consistency, consistent, making it per month. Or let's say maybe you're not going to make 10% exactly. Maybe you're going to make something like 7% or 10. Maybe you make more. Maybe you make like 12%, 11, something like that, right? So what I want you to do is forget the money that you're making right now. Even if you have a small account, forget it. Even if you're making €3 a month, All right, that's still making money. That's still profits. You're still making profit. Okay, it doesn't matter if you're making €1 a day or whatever, you're still making profit, and that's good because you're still making profit. In the Forex industry or in trading or whatever, you don't need to take care, or you don't need to see the money going up or down, whatever. You have to have a neutral perspective about the market. Okay, you can't just be emotion. So let's say I have a trade open and you just close it out when you're seeing profits, right? You can't do that because you're not going to make profit, good profit, I mean. And you can't have like a trade that's almost going to hit stop loss and you just close it, because sometimes it goes back down a few pips. It almost hits your stop loss, but then it shoots back up. You know what I mean? So I want you guys to not think about the money for now. All right, I want you to think about risk to reward, and this will help you a lot in your Forex journey, because let me show you this, and this is what I mean. So let's say you trade, let's say you have, let's say you place one trade. I mean, actually, let's say we place 5 trades today. Okay. And the way I do it is risk to reward, obviously. So I risk 1% per trade. Okay, this is what I risk. So let me put that. So I risk 1% per trade. Let me move this a bit so we can have a better view. So we placed 5 trades today. Now this is what I mean, and this is why I place less trades. We place 5 trades of 1% risk, so that's total of 5% risk total. All right, now let's say we lost 3 of these trades. So we lost 3%. So we lost 3%, so we lost 3 trades, but we only won 2. So 2 trades won. Now, my risk to reward is always, I mean always, 1% risk, 2% or more reward. And you tell me why. I'm going to tell you just now why. So in this case, we did lose 3 of these trades. So we had 3 losses, but we had 2 winners. This is why we do risk reward. So we only lost 3%, but with these 2 winners, since we have 2% or more reward in every trade, we're going to be in profits by 1%. Okay, so I'm going to show you what this means. So let me remove everything, because let me explain it a bit more in detail. All right, oops, sorry. All right, so let me remove that. Okay, what do I mean by this? So 1% per trade. Risk to reward is always 1% risk and 2% or more reward. Okay, reward. So let's go. So we had 1, 2, 3, 4, 5 trades open. These are 1% each, so that's why I placed 1. We lost 1, we lost 2, and we lost 3. Now these 2 trades, we have 2% or more reward, and this one was as well, but we lost 1%, so we lost 1% on these. So let's say a total of 3%, 3% loss. And from these 2, we had a 4% win? Because we had a 4% win because we always have a risk to reward ratio. We always have risk to reward 1 to 2 or 1 to 3, 1 to 4, more than 2, okay? Or more than 1. I don't want to see 1 risk and 1 reward, okay? I don't want to see that when you're trading. I want you to see a risk to reward ratio of 1 to 2 or more, because this will make you all the profits. So we did lose 3 trades and we won 2, but we're still in profits by 1% at the end of the day. And that is what you call risk to reward. And that's how you have to start trading and implementing these stuff in your trading. Because if you don't do this, if you don't look at risk to reward ratios, if you just risk 5%, 3%, 2%, and don't have a proper reward that will combat the losses, you're just gonna be blow your accounts. So what I mean is, always risk 1% and always profit or reward yourself by 2% or more. Now you tell me, how the fuck can I identify how much I'm risking and how much I'm rewarding myself per trade? So let me go to this recent trade. I think it was GA. Yeah, GA. So here's GA. Now yesterday we had news come out of NFP. We have okay. We have about 10 minutes left, so I'm gonna do this quick. So yesterday we had a nice trade for 5.6% right here, profit. NFP fucked us up and pushed down here. So it pushed to the level of level 1. Now this is how I trade. You don't have to understand this for now. You can take the course as well. It will give you a good understanding. Or you can go on my YouTube channel and there's a video explaining the whole process. So it's back to level 1. So I'm expecting high still this level now. And then a reversal. So how do I identify risk to reward? So if you get these long and short positions, right? These are very important, right? Long and short positions to identify your risk to reward ratio. Now, when you go here, someone messaged, I think. Let's see. Yeah, I'll leave it. I'll leave it in the FX chat, okay? Or you can go to Forex training chat room, Forex training, and it should be there. But anyways, so how do you identify this risk reward? You grab these long and short positions, okay? If you're going long or you're gonna buy, you get the long, and if you're going short or selling, you get the short position. Now, when you place it, you can see that here's your pip amount and here's your stop loss pip amount. Right in the middle, this is what we really need right here. Risk reward ratio 6.42. That means we're risking 1% for a 6% reward. So risk is 1%. As I said, we always need to keep this at 1%. All right? And our reward will be at 6%. So that's very good. You know, we're gonna go, let's say we lost 1% from this trade yesterday. If we win this, we're gonna make 5 times more than what we lost yesterday. And that's what I mean by risk to reward. You have to, like last month, we were at 5% profit at the last week. And I thought that we're gonna make 5% profit and that's it this week. And then last Friday, I think, or let me check the date actually, because I know exactly when it was. What's happening? Come on. Okay, so last Monday we placed a trade. I think some of you followed it. It was GBP CHF. It was right here. We closed it at this level right here. So we closed it at this level. So we closed it at somewhere here. So we closed that somewhere right at this level. So that gave us 6% profit. Look at that, guys. So in one day, so in a whole month, we were at 5%. And just in one day, all right, in one day, we bring that up to 6% more. So that means 11% in that whole month already gained, all right? Now, this is what I mean by risk to reward, guys. You need to have risk to reward, and even if you're going to lose trades, you're going to have better trades that combat it, okay? That's why you have to only risk 1%. Now, this is huge. I think I'm gonna enter a trade right here as well today, guys. So I'm looking at this to the upside for at least 6% as well. But another GA trade today for 6% as well. So if we win these two, we have about 12%. And this whole month, we can just not trade anything because we already aimed a 10% profit. Actually, a bit more, so 12% profit. But that's what you need, all right? So let me show you, for example. So we have this long position, all right? You want it, so right now it's risk reward 1. So that means 1 to 1, all right? So 1 to 1. So risk 1, reward 1. We don't want that, all right? We don't want 1 to 1, all right? We want 1 to 2, like this, all right? 1 to 2 is better because now if we have 3 trades, we lose 1, and we have 2 trades open. Let's say we win 2, as I said before, we're gonna get 4% profit. That means 1% reward, okay? If we lost 3 before it. So this is why I want you guys to understand, okay? This is a very crucial thing to understand. And if you don't understand this, you're not gonna go anywhere in the Forex industry or in trading in general, because in trading, you need to manage your money. You need to have a proper risk to reward ratio, and you have to have a proper risk management, okay? If you don't have it, forget it. You're gonna lose your money, okay? You're just gonna lose your whole money. You're just gonna lose your account, and that's it, man. You're just gonna fuck everything up. So risk to reward is very crucial, okay? As I said, last month we were at 5% profit. Last week, last day of the month, it was 30. We made one trade, which was GPBCHF, that bring us up to 10% again. So look at this, 6% profit, 6.5 is a bit more. So about 12% of profit in a whole month with just one trade, going back to that, all right? So you have to understand this, okay? This is why I don't place 5-10 trades a day. Let's say if I place 10 trades a day and we lose all of them. I mean, that's impossible, but let's say we lose all of them. So we have 10% down today. So in that month, you have to stress. You have to make for like you have to make at least 20% profit this month. If you don't, you're not gonna be a good amount of profit, because you can't just make 1% per month, because that's like a small amount. This is why I trade one trade or two max, because when you have 1 or 2 trades, let's say you lose both of them, only 2% loss. Yesterday comes, I mean, tomorrow comes, right? And you make another trade. Let's say you win one trade of 2%, so you break even, all right? And then let's say another day comes. You place 2 or 3 trades, right? You lose one, but you win 2. Let's say one of them was a 4% reward. So you have 4, 5, 6, 7% in one day, all right? Now this is what I'm telling you guys. Don't think about the money. Don't think about how much trades you're doing. Think about consistency, and think about everything that you're doing. You know, you have to start journaling your trades as well. It's very good to learn. That's what I do. But yeah, risk to reward, guys, is very crucial to understand. And if you don't understand this, you're not gonna go anywhere. So this is what I wanted you guys to know, the first bit. And for you guys that just joined right now, I'm recording this session, so I will be uploading it on YouTube, and you can just go and view it, okay, after it. I'll send you the link. It's gonna be on private, so this is available only to Slapstock members. So I'm gonna leave it on private. I'm gonna put it there, and you can just view it, okay? So risk to reward, guys, this is what I mean. This is why I trade less than 2 trades or less than 5 trades a day, because, you know, as I said, it doesn't matter how much you're making money per day. It matters on the long run. We want consistent years. We want profitable years. Okay? We don't want profitable days. We want consistent, profitable years. All right? Don't think about the now. Don't think about this moment. Think about the future, what you will gain from this in the future, in a year, 2 years, 3 years, 4 years. Maybe you invest more in that process and making more money. You know what I mean, guys? Because if you're just gonna be stuck in that position, if you want to be making 5, 10, 15 trades a day, go ahead. I'm not telling you to not do that. It's up to you. You're just gonna lose your money though. And don't come blaming yourself or blaming someone else that you copied trades from because you just followed all his trades. All right, you had that whole authority. You had the management to do that. You had all the power to do and follow what that guy said, and it's all up to you. You can't blame that guy because he just provided the signals. He didn't tell you to go ahead and follow them, right? You just go ahead and follow them. Now this is why I don't trade 10 trades, okay? Listen to this. I'm gonna put this on YouTube, rewatch it, learn it. Okay, guys, learn it. I'm gonna put it on YouTube for reasons for you to just keep watching and understand why risk to reward ratio is important for your trading. And this is why I never trade 10, 5 trades or more in a day. Okay, guys, because if you do that, you're just gonna fuck everything up. You can. I'm not telling you not to,